Hello, my name is Paresh, and today we will be learning about how to calculate sales and income tax. Let's start with sales tax. Sales tax is tax on purchased goods. The tax rates vary by state and local governments and are also collected by them. They are collected by them via the seller of the good or service. Almost all the states have sales tax. Let's try an example. Here we can see that a man decided to buy black-eyed peas, corn flour, and Mexican white oak. 2 units of black-eyed peas cost him $12.50. 5 units of corn flour cost him $34.95. And 1 Mexican white oak cost him $29.99. Because the tax is 7.5%, we will multiply this number by $12.50, $34.95, and $29.99 respectively. So when we multiply $12.50 by 0.075 or 7.5%, we get 94 cents. Corn flour turns out to be $2.62, and the Mexican white oak turns out to be $2.25. Now, to get our total, we must add this number and this number, our subtotal and our tax, to get the total. For black-eyed peas, that would be $13.34. For corn flour, that would be $37.57. And for Mexican white oak, that would turn out to be $32.24. When we add all this together, our total cost that we have to pay up front is $83.25. So as you can see, sales tax is a very straightforward idea based on one percentage applying to almost all goods. When I say almost all, raw foods are exempt. So if you have fruits, milks, eggs, or vegetables, those are exempt from sales tax. Let's move on to income tax. So income tax is tax deducted from your income. Although it may not be deducted immediately, it is deducted on April 15th or around that date when you get your income tax return. From there, the federal government takes out or gives you back money based on your federal withholding. Federal withholding is a deduction, and it basically is taking out money from your income every month to pay for income tax. This is usually like I put in money, how much more do I need to pay, or how much will you give me back type of deal. So let's do a problem using federal withholding as a deduction. So a woman earns $2,050, and her employer takes out 11.4% of withholding. She also pays 6.2% for Social Security tax and 1.45% for Medicare tax. Now, I simplified things for you by giving you the totals of all the deductions here, but I would have liked for you to encourage and try it yourself. This comes out to a total of $1,659.47. So as you see, withholding is basically coming out from your income. straight up before you even get the check. Now, for income tax, this is actually really different from sales tax because it's not so straightforward. Let me explain by a problem. But first, to help us understand income tax and deductions, I will read this out to you. Most workers pay yearly federal income taxes based on what they earn. Employers deduct money, called federal withholding, from the workers' wages and send it to the federal government. A worker's pay before any amounts are deducted or taken out is called gross pay. Net pay is gross pay minus all deductions, including withholding. Taxable income is the total amount of income minus deductions. So as you can see here, the formula for net pay and taxable income are seen here. Now let's move on to that income tax problem. Here, a man has a taxable income of $26,318. He had to pay for federal withholding $4,059. Now, when you will be taught this in school, most of the times they will give you a table as such. Right here. And so you can see that on this, his income comes between $26,300 and $26,350, making his tax $3,524. Now, all we have to do is deduct that tax from his federal withholding to get a number that will tell us how much he has to pay or how much he'll get back. In this case, he'll get $535 back. So, with every income tax, you must first pay deductions based on your employer, who charges those deductions and sends it straight to the federal government. Then, each year around April 15th, you will submit a federal income tax return. And at that time, you may either owe additional taxes or you may get a refund depending on several factors, including amount already paid through the withholding. So, therefore, you can see that withholding directly affects the amount of income tax because it's what you've already paid, plus it contributes to lowering your taxable income. So today we learned about sales tax and income tax. We learned how to calculate them and what exactly they are used on and how the government collects it. Next time we will be discussing compound and simple interest and comparing and contrasting it as well as calculating it. I hope to see you next time in our next video.